Hi everyone, welcome to BlockSnack, your daily crypto wrap-up for Thursday, May 14th, 2026. We break down Bitcoin, Ethereum, and blockchain news, fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
BlockSnack.
In today's video, we explore why Ledger and Consensus are delaying IPOs, Bitcoin's rally dynamics, Ethereum's recovery potential, the low priority of crypto policy among US voters, Jupiter's new lending market, the Clarity Act amendments, Neptune's blockchain investments, and Cryptobell.live's call for Web3 innovators. And just as always, a quick disclaimer. This content is for informational and educational purposes only and should not be considered financial advice. Always do your own research. Now, with that out of the way, let's jump right in. Ledger, the Paris-based crypto hardware wallet maker, has decided to hold off on its plans for a US initial public offering. This move comes amidst a downturn in the crypto market, where investor demand for new listings has waned significantly. Instead of going public, Ledger is now exploring alternative funding routes such as private rounds. Earlier this year, the company was eyeing a public listing that might have valued it near $4 billion, with Goldman Sachs, Jefferies, and Barclays as advisors. However, no official steps, like filing a draft S-1 registration with the SEC, have been taken. This decision reflects a broader trend in the digital asset sector, with companies like Consensus and Kraken also pausing their IPO plans due to declining token prices and volatile trading volumes. Despite the delay, Ledger is not slowing down its expansion in the US. It has appointed John Andrews, a former Circle executive, as CFO and opened a New York office to focus on institutional clients and its Ledger Enterprise platform. Moving on to Bitcoin, the recent rally past $80,000 has caught many eyes, but it lacks the support of US spot demand. Instead, this surge is driven by leveraged traders in perpetual futures markets. The Coinbase premium, which measures price differences between US and offshore exchanges, remains negative, signaling weaker US institutional interest. On-chain data shows that the demand has sharply narrowed since April, concentrated more in futures rather than spot accumulation. Analysts compare this rally to a relief bounce similar to March 2022, with $70,000 identified as a key support level. This level represents the average cost basis of short-term traders and could act as a floor if prices decline further. Now for Ethereum, which is showing signs of a potential V-shaped recovery. According to Tom Lee from Fundstrat, Ethereum's recent price declines could be followed by a rapid recovery. Historically, Ethereum has experienced significant drops, such as the 64% fall from January to March 2025, only to rebound quickly. Current market conditions mirror past cycles, suggesting a similar recovery could be on the horizon. Analyst Tom DeMark has identified $1,890 as a potential bottom, with prices expected to test this level in an undercut scenario. Additionally, staking data reveals a record 4 million ETH in the validator queue, indicating a massive supply restriction as 30.3% of Ethereum's supply is staked. Turning to crypto policy, it ranks low among US voters' priorities ahead of the Clarity Act vote. A recent survey found that only 4% of respondents would consider a candidate's crypto stance as a voting factor. Issues like affordable housing and consumer fraud protection are seen as more pressing. Despite this, the crypto industry has invested heavily in political lobbying, spending over $450 million across recent election cycles. Interestingly, while only 27% support government efforts to legitimize crypto, a HarrisX poll shows 52% favor the Clarity Act, indicating some legislative support. Next, let's talk about Jupiter's partnership with Bitwise to develop a lending market for the USDe stablecoin on Solana. This market is isolated from Jupiter's existing liquidity layer, minimizing risk for institutional users. The decentralized Fluid protocol will support this infrastructure, providing deep liquidity and risk mitigation. Despite USDe's decline in ranking post-2025 crash, this collaboration aims to enhance DeFi and institutional adoption. Amid the upcoming vote on the Clarity Act, several amendments have been filed. These include proposals addressing stablecoin rewards, DeFi regulation, and even political concerns involving the Trump family. Senator Elizabeth Warren introduced measures to prevent government approval of banking applications linked to political figures. Other amendments focus on anti-money laundering and sanctions compliance for DeFi platforms. Additionally, Republican senators propose creating a digital asset cyber innovation center to counter crypto threats. Neptune Digital Assets Corp is expanding its exposure to blockchain platforms by investing in Polymarket, a prediction market platform. This move aligns with Neptune's strategy to diversify its digital infrastructure investments. Polymarket represents a new category of crypto-native financial applications, emphasizing market-based information discovery. Neptune's portfolio already includes significant holdings like SpaceX shares, Bitcoin, and Solana tokens, highlighting its commitment to blockchain utility. Finally, Cryptobell.live is inviting Web3 founders and innovators to apply for future episodes. The media platform aims to bridge the gap between AI, blockchain, and mainstream audiences, reaching over 60 million households. Upcoming episodes will feature interviews and discussions on blockchain innovation, market trends, and crypto culture. This initiative highlights the growing demand for mainstream visibility of blockchain and AI movements. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next BlockSnack.